All right, so this is section or part 7, finding and qualifying investors to fund your note deals. This is one of my favorite things to talk about and train, and I think this is one of the scariest things for most real estate investors. How do I qualify investors to fund your note deals? And here's the thing. I want you to do me a favor in this session. I want any fear questions. I want you to take that and flush those down the toilet. I want you to really think about it tonight. I want you to, tonight, today, whenever you're watching this, whether it's live, but realize what I'm going to share with you is the rule. It really is what it is. Raising capital, if you go back and talk to all of our students, all of our successful coaching students have closed on, they only got a 95% closing ratio with their funding students. Here's the thing. Here's the underlying overwhelming thing. The thing that they were the most fearful of, like raising capital, often was the easiest thing for them. Because it's so easy, there's so much money out there, you have to just start marketing, networking, and you'll find investors. Yes, Dan or whoever else is upset about that, tough. Just listen to me on this. I will not steer you wrong, okay? So finding investors to fund your deals. Where do they hang out at? Okay? Well, they hang out at real estate investment clubs and meetup groups. That's your local networking, okay? And more networking events and cities are laxing it for you to be able to meet, okay? You can also go to meetup.com right now and find real estate investment entrepreneurial clubs, investing clubs all across the country for free. That often will have discussion boards, message boards, meetings. Sometimes they're live streaming it, sometimes they're in person. For free right now, okay? By going to meetup.com. You also can go to National REIA Club and find all the national REIA groups across the country too. Real estate clubs, great place to go initially, not only to get education, but also network with other people, okay? All right. LinkedIn, hello, real estate investor, note investor, okay? Easy keywords to search and find them right now online. You could also be a part of Connected Investor as well. That's a website to find other investors. Bigger Pockets, you can go in there and find people. Literally, people will post on there, hey, I got 50K in my IRA. What should I do with it? I got 100K. What should I do? And that's a great way to reach out to people. Hey, saw that your post. Here's what I would do. And I've got some opportunities, okay? One of the most successful money-raising campaigns I've ever seen was our buddy Wayne Snell, who created like a short 20 to 40-minute video about what he did, how his business ran, what he did with it, basically a pitch video. And he would message people, post on 50, 100 grand. He would post, hey, here's what I do. Maybe it might be something interested in, and raise them over $2-3 million. That's all he really needed, okay? So going to self-directed IRA training events or trustee events, you'll see Equity Trust has a big event every year, usually down in Orlando. New View in Lake Mary, Florida will often have an event once or twice a year. Quest IRA has training events all the time. Depending on what part of the country you're in, look around you, see if there's an office in a major city. A lot of these will have started live streaming these things, and you can still connect with people remotely. And I've had students raise capital from a live stream event where somebody got up and talked about their deal, shared their deal online, and somebody from St. Louis wanted to fund their deal in Houston, Texas. So it's all about networking and connecting with people. I like using the county records. Our buddy Bob LaChance at Riva Global has worked with me to develop a virtual assistant training program where the VAs will go out and scrub county records and pull local investors, okay, from the appraisal district and the county clerks that you can market to. And they'll reach out on LinkedIn to find these people that you can network it and put the scripts together to. But this is a very, very simple thing. So if you literally go to netraonline.com, that'll take you into all the county records, like I said before, official public records on it. It shows you a full map. And then just start searching. Now, let me share something with you. If you want to do something here, do me a favor. If you're watching this, go on over to Google or whatever your search engine is, okay? Open up a different browser, okay? Open a different browser like Google right here, okay? And just type in self-directed IRA custodians, okay? Self-directed IRA custodians. Get the interest group, okay? And then you should see the ultimate list of self-directed IRA custodians and administrations if you scroll down, okay? Ultimate list of self-directed IRA custodians and administrators. Why you want the ultimate list? Because if you click on this, drum roll, please, everybody. This gives you a full list of 50 plus custodians. It gives you the name. Yep, we don't need that. Name, their details, phone number, and their website. Okay. Now, this is nice. It's a little bit different. They used to do large, medium, and small. Now they just have it on one list. This list has just recently changed. But this is a big enough list for you. You could literally, like Entrust is a big one, Quest, Equity Trust, okay? IRA Services, Kingdom Trust, Mid-Atlantic, all right? Pensco, NewView, there are a lot of companies on here, okay? Quest IRA is not a Quest Trust company. UDirect, but these are the names that you would search for at the county appraisal district, okay? And let me do you one other thing. I'm gonna put this in the chat roll so you can go directly there, because if you're like, what? Scott Carson. All right. There's the list of 50 IRA custodians for you. And then when you go to the county appraisal districts, here's the thing. If somebody has used their self-directed IRA to fund a real estate purchase of property, the titling of that would be Mid-Atlantic IRA for the benefit of Cody Cox, Quest Trust IRA for the benefit of Charles Salmon, NewView IRA for the benefit of Scott Carson. I wonder if Rocket Dollar's not on here. Okay. That's kind of there. We need it fixed. Anyway, there's so many. And if you type that in, like if you were to go to Travis County, type in Equity Trust right now, it would pull up like 130 properties that were in Travis County that had the name starting Equity Trust for the benefit of whoever. Okay. Now the thing that's nice is, those people are real estate investors. They have money. They're looking for deals. And the fourth thing, since it's with a self-directed IRA, that's got to have like a third party. So great joint venture partnerships, people to fund your deals. That's a great way to do it right there. You've got those four things instantly in common with those accounts. Now, if they've lent money out of their IRA, it would be on a deed. It would be on the county clerk or the recorder's office, okay? So you would go there and do the same thing. Search for those 25, your biggest names in your area and look for them. Now, not every one of those is going to be in every county, okay? And it's going to be more, depends on the location. That's why you really should probably take a second or two and look and see the locations of where they're at, because they're going to have a wider berth of people with those IRA accounts around the offices, okay? Quest is obviously going to be big here in Texas. All right, Equity Trust is big in Ohio. It's their backyard. Okay, NewView is going to be bigger in Florida because it's that located. Equity Trust is one of the bigger ones across the country. So it should always be your search as Equity Trust is number one, and then Quest is probably the second largest for the most part, or Pensco. No offense to anybody else. Differently. Now, if you're in California, some states won't let you search by Equity Trust. You'd have to go down to the county offices to search. They won't let you do it online. So sorry for that. If you're in a state that does that, then contact me. There's some a company that you can buy lists of IRA owners that we can help you facilitate and pull in the county of your choice. Okay. Dan says, did you say they will disclose their clients? No, Dan, I didn't say they will. What do you mean disclose their clients? You're talking about Quest? No. If you go to the county records and type in, okay, if you had a self-directed IRA with Quest Trust Company, all right, it wouldn't be titled Dan Sherry's the owner. It would say Quest Trust Company for the benefit of Dan Sherry. So if I go to county records, public information, and type in Quest Trust, boom, I would pull a full list and I could see those that bought a property. Well, if I click on that, it would probably show your name. It may show you your IRA number, but a lot of them, for 90% of it, shows Quest Trust Company for the benefit of Dan Sherry or whoever. There you go. Now I got a mailing address and a physical property. I'll jump over and search, okay, Dan Sherry. Let's see if Dan Sherry owns anything else in the county to find his primary residence so that I can send him a letter to. Okay? Work with me here. Now, in California, they won't let you do that. You got to know the address. And if you don't know the address, it's going to happen. but there are companies out there that pull list information off the tax, IRS, and other things like that. Like I can buy a list in Orange County, California, or San Diego, and pull a list of IRA owners that have filed with their taxes. Because if you, one of the questions on your tax return is, do you have a self-directed IRA or an IRA? Yes or no? And I can buy that list, names, emails, addresses, phone numbers a chunk of the time, and I will mark it to that list in a couple variety of ways, okay? So what I do with a list of custodians, those are the search engines. That's what you search on the county records. Dan? County records. I'm gonna look for Quest. I'm gonna look for UDirect. I'm gonna look for these companies because that's how it's labeled. Does that make sense now, Dan? No, they're not gonna give away their clients, but if you go to the county records, they would show that, okay? You know what? Let me help you out here. Let me help you here. Okay, let's just do this. Let's go to Netra Online. It might be, we're good on time. Let me share my screen. You're not probably the only one confused right now, which is okay, totally okay. So I go to Netra Online. Here we go, public records search online. I'm gonna click on public records. Like I said, not every county will allow you to search by owner's name. Okay, so type on Texas here. No, if you have a deal, well, yeah, I mean, if I have a deal, I'll reach out. If I'm buying in Texas, okay, I'm in Texas. Yeah, I would send a letter out to these, hey guys, are you looking for, and that's what I'm gonna get to. What's the follow-up procedure on this? Just chill for a second on here, okay? So let's say I'm gonna go to Travis County, which is here in Austin, because they're my closest area, so I can send a letter, send a coffee meeting or whatever. But with Zoom these days, you can do a lot of great things here. So Travis County Appraisal District, okay? I'm gonna hit the data online. And not property search, I'm gonna click advanced search. Owner name, right there, okay? Can you guys see my screen? You guys see what I'm talking about here? So I'm gonna type in here, equity trust. And it's just, that's it, equity trust. And lo and behold, I found 137 cha-ching properties that are owned in a self-directed IRA, okay? And you know what cracks me up? I see the very first one, 34 American Drive. These were condos that I bought at 30 grand or less than that 12 years ago. Now it's up to 232. That's just crazy. Awesome stuff. Okay, so I click on hit view details. And I'll go down here and it says Equity Trust, doing business as Sterling Trust, and this company. Now, Sterling Trust Company, they're a company that's doing hard money lending. All right, they bought this property. Great, that's fine. That's one of 137. Let's go back to the search. Then give me a borrower's name or an owner's name. Let's do the next one. Navasota Street, view details. Equity Trust for the benefit of George Christian and his mailing address, 1711 Pearl Street, Austin, Texas. Now, I know George has a self-directed IRA, and it's got an asset in there worth, what, $200,000, $300,000. He probably got some other money. So let's do this. Let's do Christian George and see what else George owns, just for the heck of it. We'll go back one more search here. Oh, maybe he doesn't own anything else in Travis County. Okay, it's fine. Let's just try Christian, the G. Oh, look at that. That's a Gerald or George, okay. So maybe he doesn't own anything. He just owns an investment property here locally. That's totally fine, okay. But we have a mailing address for that asset, which usually goes to him. So what would I do to him and then everybody else I could find? Okay, and whether it's Equity Trust or we type in Quest Trust. Let's see what, just type in Quest IRA, see what pops up. Quest IRA 29, here we go, Quest IRA Inc. Okay. Barquet Clubhouse. I know exactly what that's at. Those are lots. Barquet Ranch Road. Few details. There we go. Look at that. For the benefit of Yvonne Zurtik and our PO box number for Yvonne. Now, it doesn't show Quest IRA. Quest IRA would be 17111 or whatever like that in Houston, Texas, Park Drive or whatever like that. So I know that's the mailing address for that. So I would look at, let's look at Yvonne Zurtik and see if she owns anything else here. I heard a PO box for, which is great. That's a pretty unique name. I don't think she's gonna have anything else here, but maybe she does. Nope, because that Valley Mills or whatever is out of this area here. But that's okay. I can find out where that's located and find things in which county that's in. But do you get what I'm saying, everybody? You know, in literally like 10 minutes, we found over 150 investors, you know, basically on that list that you just got to spend a little time looking at, right? How did I get so smart? I was very lucky. I've got people that have helped me out tremendously along the way. No, and most people don't teach this, guys. You just got a $1,500 lesson for free. I've seen people sell that for $1,500. I'm like, public record, great. What I'm trying to get at, everybody, is those are investors. Those are going to be the lowest hanging fruit if you'll just reach out to them. Now, what do you do to reach out to them? I never come and say, hey, buy my deal, fund my deal. No. I send a letter out, and we have the sample templates, stuff like that in our workbook for our virtual workshop next weekend. But it's like, hey, here's a letter. Hey, saw that you bought this as with your IRA. Didn't know if it was a real estate investment. If it is, I'd love to talk with you more. I'm a local investor, or I invest locally in areas. I'm always looking to network with more real estate investors. I've also got plenty of deals that I'm looking to move. Now, moving is the thing. I don't say, I want you to fund my deal. No, always looking for more deals to move. I'd love to visit with you, see if it might be a fit in a variety of fashions. Give me a phone call, shoot me an email. And I don't put an info at, I always personal email and my cell phone number. That's the letter. Now, the first letter I send out is usually going to have 5 or 6 pages to it in color. You want to look nice. Hello letter. I will include an executive summary. It's front and back printed, so save on paper. Executive summary, a little bit about my company. On the back end side will be a little bit, maybe some of the deals we've closed, or list our team, vendors. I've done other things where I put a group, our mastermind photos, so people see that I'm a part of a group. And then I'll include a couple sample deals. You may have 1 deal on a page, or you maybe have 4 sample deals that you've closed on, case studies. All right, send that out. And I may even send out a flyer from a self-directed IRA, okay, 1 page or 2 page, front and back. And most self-directed IRA companies have literature that they'll let you use that you can send out. Now, they won't put your name on it, but it's their stuff. So if it's somebody local, say, here, did you know you could do this? Did you know you could do this? Send that out, or I'll create a blog. You know, I've got a blog that I've had in a magazine or a blog, and I'll format it so it looks like a flyer, looks really nice. I'll insert that as well. So it talks a little about self-directed IRA and using notes, or a little bit about what is note investing. So I'll include a copy of my book as lumpy mail there, okay? You know, now this will cost you some money to put like $5 or $6 to put together print, but maybe you put an ebook together that you get printed out and spiraled up. It's what I first did. And I'll, you know, drop 500 of those letters out. Yeah, it may cost you $1,000 to send those out with everything. But think about it. You only need one investor to respond who's got 25 or 50 grand to invest to make it worth your whole while. Okay? But that's the thing. It's a high hit ratio on that stuff. That's like shooting fish in a barrel. Okay? The reason I gave you the custodian names, you can look at each county and pull in the 50 names. Now, is everybody going to be there? No, not. There's other custodians on that list that aren't on that list. You know, so that's the thing I want you guys to think about, is there's opportunities there for you guys. You just got to do it. Low hanging fruit here. If you did it around the 3 surrounding counties where you're living, if you're in an area, okay? All right. What I'm trying to get is, I'm trying to remove all the I can't do this. I can't do this. How do you fund money? Okay. How do you fund it? Look, the most important thing that you guys can do is take action. You don't have to do too many of these direct mailing pieces for it to work. This is the only direct mail that we actually do, everybody. We send this out or we send out letter case studies, we follow up with a postcard, we follow up with another letter. Usually by that time, by the second or third time they got something, they reached out to us. Hey, let's talk, or hey, take me off your list, or hey, let's meet. Thank you. Okay, I might include a link to my website, a link to videos of who I am. But the point is, it's literally a great way to raise capital for you, and you don't need too many people to do that. Individually, one investor per one deal. Okay, don't bring in 4 investors for one property. That's it's a big no-no. That's pooling money. But one investor for one deal. And am I approaching them to fund my deals? Yeah, of course I am. But I don't say that, hey, I'll give you 12% and fund my deal. Nobody wants that overly aggressive, hey, let's jump in bed and get married kind of marketing plan. Hey, let's talk. Let's date. Let's go. Let's dance a little bit. Let's do the tango. Yeah, okay. Let's waltz. Okay. That's what it comes to raising capital. And that's the whole point of reaching out to investors like that. Okay. So does that make sense so far? For me, the same thing on the county clerk. If you go to the recording, do the same thing. Boom, it'll tell you all the people that have lent money on and filed a deed with an IRA company as the name. Same thing, about another 100, 200 per wherever you're at. Okay. It's a beautiful thing, beautiful thing. Now, the beautiful thing about county clerk is often, county clerk, you'll have 2 names, the person who borrowed the money as an investor, and then also the IRA company lending the money. So you can literally, that's a double whammy. Hey, here's investors that may be interested in buying deals, and also here's investors that are funding deals. Make sense? If you want to buy some lists, you can go to melissadata.com, exactdata.com, put an order with them, tell them I sent you. They can pull customized lists. This is gets a little expensive, but it's okay. Most of them want you to buy at least $1,000 worth of leads, okay, for worth their while. But think about this. If, let's just say you're buying it at 15 cents a lead, okay? $1,000 divided by 0.15 means you would still, sorry. Oh my gosh, 1,000 divided by 0.08. There we go. If you paid 8 cents a lead, it's 12,000 leads, okay? $1,000, whoops. 15 cents. That's still 6,700 leads, okay? That's a lot, okay? But that's the beautiful thing. Now you get that, say 6,000 leads, you can run a quick evaluation on their address to see who's a higher priced property, and then start targeting people that have that live in places that are over $1,000 if they look like they own that address. Because now the big thing about Melissa Data Exact Data, that's IRA investors. It's not going to be a self-directed IRA custodian or trustee. It would be like anywhere from Wells Fargo to Chase to AG Edwards. It's not going to be in a vehicle like a self-directed IRA custodian like Quest. They can do it in real estate. So you would have a little bit more education to deal with those people to move into something that they can use to fund it. But still, we've raised plenty of money that way, targeting. No, I don't send out 6,000 postcards, but what I do with those lists is I'll upload 1,000 people at a time, 1,000 emails at a time, and import that into LinkedIn and start connecting with those people on LinkedIn in a variety of ways, okay? So raising capital, social media posts, post deals from past experience. Hey, here's guys, here's what I do. Now you want to post the most attractive ways to post past case studies. Obviously, Facebook groups. You can post to your Facebook page if you got stuff. I'd post it to your business page. LinkedIn and LinkedIn groups have a really big bang for their buck, okay? Bigger bang for their buck when it comes to, what was I going to say? When you're finding investors, there's IRA groups, there's no buyer groups, all right? There's some big lists on LinkedIn on real estate stuff. I got a couple lists that I'm a part of that have 100,000 plus contacts in there. Now you want to post on a regular basis on a variety of things, but still though, guys, post your upcoming opportunities. Hey, I'm working on a list. I got these 10 deals I'm working on. Maybe take the 10 street view shots and put it on one image. Use Canva for that. Hey, here's some deals I'm working on. Ohio, Cleveland, whatever. All right. Never, ever mention guaranteed or safe. This is real estate. It's a risky investment. Some things go good, some things go bad. Okay. That makes sense before we dive into qualifying your investors for your deal. This is why I believe that there's plenty of money out there for everybody. $7 trillion in retirement funds and about $1 billion of it in self-directed IRA accounts. Most of the money sitting in self-directed IRA accounts is making 0 to 4%, guys. You have a huge opportunity to help make it a win-win-win for you, but also a win for the investors because their money's not making anything sitting there. Oftentimes negative equity, when you look at fees or inflation, they've got to be invested to be making some money. But a huge amount, millions and millions of dollars. Last time I talked to Nathan Long, there was like over $350 million sitting on their account in 0% earning accounts, okay? So let's talk about qualifying your investors. It's a great thing to reach out to a bunch of people, but there's probably a lot of times that you're going to want to run screaming from people, okay? Don't want to deal with them because they may be Debbie Downers, you know, that you don't want to work with. So let's get in the qualifying aspect of things. Here's the things I always like to ask when people reach out. Okay. Are you currently investing in real estate? Not something from 5 years ago, 10 years ago. Are you currently pulling the trigger? Because if they are currently investing in real estate on their own, it's going to be a little bit more expensive money because they're understanding opportunities, okay? Are they accredited or sophisticated? That's why you're going to ask, okay? I actually have a one-page form that we provide our virtual workshop attendees. It's a sample that you guys can go tweak of the questionnaire. You know, what'd you make this year? What'd you make last year? Okay. What is your net worth with real estate? What's your net worth without real estate? Okay. How much are they looking to invest? How long are they looking to invest? If they say, oh, I want to make 15%, you know, in 90 days, then go do it yourself. Most people won't be able to go do it themselves. Are they active or passive? And by active means, do they want to really dive into it and sink your teeth, or passive? Like, I just want to get a quarterly payment. Okay. What kind of returns are they looking for? This is a big thing. You know, when I ask them what their money's invested in, that'll tell you often the type of returns they're getting. Now, if they're in the stock market right now, we know that they're not feeling very good, right? The market dropping like it did. So, hey, if I could get you 4 to 8% for a short period of time, of 12 to 24 months, would you be interested in something that's secured by real estate? That's going to be worth a lot more. The values can stay a lot more stable than up and down. Yeah, or where's their money? Oh, it's in a CD. Oh, certificate of disappointment. Okay, so it's making maybe 1%. If I could show you 4 to 6, would you be interested? Those are the questions you ask, and you get better by doing that over and over again. If you've ever gone to a bank or into an investment company, usually what they're going to do, you're going to see these advisors pull out a questionnaire. They're going to start asking questions. It's the same concept you do here. Right? Asking questions, keeping track of those questionnaires, okay? The investors that you want to avoid, people that are really unfamiliar to real estate investing for the most part, that they don't understand it, you have to educate them heavily on it. It's probably best to move away from them, all right? Part of the thing that we ask in the questionnaire is, hey, what kind of real estate investments have you done in the past? What kind of real estate trainings have you taken in the past? They list off a bunch of stuff. Okay, great. They don't list off never done anything. I'm like, probably not a fit. Okay. People wanting a short-term or higher ROIs, like we talked about. Like I had somebody reach out to, I got $500,000, I'll make 20%. Like, well, then go do it yourself. Well, I'll take 15. Well, great, go do it yourself. Okay. And then they got mad when we invest their money, which is funny. Anyway, I'm a big believer that you should probably, I know we all start off with, you know, hey, we get some money, we get excited like a puppy, you know, a new puppy. But you should really stay above. Anybody that's got less than 25 grand, really stay away from, just because it's probably the last money, and those people are the ones that are going to drive you the bonkers. I would stick to people that have at least 50 grand or less, and then if they come to you like, I got 100, 200 grand to invest, okay, start off with like half of that. Okay, always look at ask for references. Okay, hey, do you have an attorney, a CPA, anybody else you've worked with in the past? Give me the name of your references, so I reach out to them. Because if you're a pain in the ass client, or a pain to work with, then I don't want to deal with it. If you see somebody who's, oh, I'm sue happy. Oh, I've sued this person, I've sued this person. Okay, great. We're going to move a different way. Okay. And then also just look at their social media. If you see people bad-mouthing other people over little things, especially in the political environment that we're in these days, oh my gosh, there are people that I would never do deals with when I see what they post online. You don't want that. Look, I wish every deal was good, but at some point you're going to have a deal go south. And it may not be anything that you had to do with it. It could drag out longer. You could have a moratorium on your foreclosures happen like what's happened now. wave foreclosures like what happened 12 years ago where values dropped. There's things you just, okay? It's real estate. It happens, okay? So that's why it's important. You're working with smart people. You want to have agreements, you have stuff written in place, okay? Anonymous, okay. What about avoiding security laws and SEC violations? This is why you want to have your joint venture agreements worked out. This is why we talk about not pooling funds, okay? One investor per one deal in joint venture partnership with you can put them on as a first lien holder, or you have a collateral assignment to them. There are things to protect you on that, okay? So talk to an SEC attorney, all right? Talk to things. It may cost you. I would not go drop 30 grand to raise capital for a fund when you haven't closed on a deal, okay? If you keep it clean initially, one investor per one asset, and you have everything documented up, be fine, okay? Talk to your real estate attorneys in a local, always have a real estate attorney review your documents, as I said before, okay? Hey, Patrice. So that's what I'm trying to get at, okay? Make sure you have documents, one person for one deal. Initially, probably just want to work with accredited investors, but you may not do this. So that's what I'm saying. Maybe you just need to borrow money for an investor on a lien, like a private loan versus a joint venture. That might work well, but do a collateral assignment on that, okay? Maybe you need to put in a trust, all right? Borrow from the trust. Always, 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 always require your potential investors to first fill out your investor profile questionnaire. I would have them fill it out and initial it and send it back to you. Sometimes they don't want to answer the question in person, but what I do a lot of times when I talk to somebody, I'll talk to them on the phone and ask them questions. So where are you at? Where are you sophisticated? Are you where are you at? Okay. What have you done before? How much are you looking? Okay, great. Even if I'm just talking with somebody at a meetup group, I still send them that profile question. And then I ask them to follow up, not only with just sending that back to me, but also send me a pledge letter or email. Pledge letter simply is like say, hey, Scott, it was great talking to you. I've attached the investor questionnaire filled out 100%. And I've also filled out attached my statement from my IRA account. And I'm pledging 50 grand of the balance to go towards deals for the next 6 to 12 months with you, okay? Those are the three biggest things. If you don't get those three things, that person's not gonna fund the deal. I don't care if they're your sister or your mom. Most of the time, they're not gonna fund the deals if they don't provide it. You gotta have that yes, yes, yes. And don't skip on. I've seen students of mine that skip that and they get upset why I'm in trouble now. They didn't fund the deal. Did you get this and this? No. Well, duh. If they're not going to do those simple things, they're sure as hell not going to wire money over to you. Okay? Trust me on this. And also, too, why you ask where the money is coming from in your questionnaire, too, is you want to know if it's at AG Edwards, that's not an account that will fund a real estate deal. They need to trade out of their funds. That's a 3-day minimum, 3 business day minimum, and then transfer it to a new Quest account or Rocket Dollar account that can fund the purchase of the property or the note. So you're going to have at least 5 days there. So that's why I asked, where's it coming from? Okay, we need to transfer that money. And if you're just going to wire from if the money's in your checking or savings account, great, you can fund that way if you want to do it that way. That's fine. But if it's an investment account, you got to move it, and you got to look. Hey, we're getting ready to fund next week. Want to make sure the funds are going to be available to be there. Okay, keep that in mind. Takes at least 3 business days to close out and probably another 3 days to transfer the funds, everything to be clear. So you got to look at least 5 or 6 days there to move money from a traditional trading account, a stock account, in funds, mutual funds, stocks, bonds, and move that out into something that is cash that you guys can use, okay? Always have your paperwork created initially by your attorneys and go from there. I always allow for my funding partners to review my joint venture agreements. If they don't like something, we can tweak it up, tweak it. Always allow them to have the professional review it, okay? Always write everything down too. Agreements, keep notes of your conversations. That's why we use investor sheets. Somebody sends me back a questionnaire. That's why we use Outlook at least. And then we also use Infusionsoft. So if I send letters out, they know that they received them. Even if they didn't open it, I see if they opened it or didn't open it. Okay. It was received at least. The same thing, I can use it to keep track of my notes. Now, some people will just keep file folders and then track them, and that's totally fine. Some people do electronic, whatever your case is at, but keep track of your conversations. Keep a sheet of that, because that's cover your assets aspect of things. Because if you get a pledge letter and a proof of funds and a questionnaire, and the borrower or the investor still flakes on you, and you're like, oh shit, I need to get some more time from the the buyer or the seller on these assets, you can just say, listen, I apologize. I need to get a 48 to 72 hour delay. I just had my investor flake on the deal. I've attached the pledge letter, attached the email, I attached this proof of funds. So you see, I wasn't just pulling your chain. Give me 48 to 72 hours to find a backup. And most of the time, your sellers will understand that it happens, and they'll often extend it, whatever you need. And same thing too. If you call me up, and I tell this all the time, my students like, hey, if you're having trouble, call me up. And then the first time I'm going to ask, oh my God, I got to fund this deal in like a week. Well, have you sent an email out to your database? Have you marketed this online? Did you get a pledge letter, an email, and a questionnaire filled out? If no, well, then that's your own fault. I'm not going to reach into my funding partners to fund your deal when you won't even do the work yourself. Okay. Is there a recourse against the investor? Just blacklist them, Leslie. I mean, that's all you can do. Blacklist them. I'm like, no, you're not going to fund another deal. I had a guy pull 150 grand on a deal supposed to fund. We've been in my office 4 or 5 times, and then he walked away, and I blacklisted him. He reached out, oh, I got a deal that it was too good to be true. Well, that's great. If it's a once in a life, great, good for you. You're not going to do it with me. So that's the thing, Leslie. If they won't fund and they don't send you this stuff, you know they're not going to fund. They don't follow that stuff, but it still happens. It happens to us all. So just blacklist them. Just remove them. Don't deal with them. It doesn't mean you can't be cordial if you see with them, but they wanted to come back and fund a deal. It's going to drop down interest rate, and it's going to get a much more better contract in my face. Okay. Here's the thing too. Most investors out there can't make 6% or greater on their own. They can talk about it, but the most of them aren't going to pull the trigger. 90% of people aren't going to pull the trigger. Okay. So well, great. If you can make it on your own, then why haven't you done it yet? If you're waiting for that perfect deal, and it's been, how long has your money been sitting idle for a year? You could have made 6% already, or 8%. So if you now go make a deal in 90 days and make 12%, you really only annualized roughly a 3% return. Should have been with me for 8. Okay. Here's another thing. If you're going to set up a payment arrangement to your investors, do it on a quarterly basis at the max. Don't do monthly. Okay. Quarterly, biannually, once a year, when the deal is done. Those are the options that we allow. We don't do monthly. It's a paperwork headache. Okay. You can use pretty inexpensive online portals for communication, Basecamp, Slack. You can use a CRM tool like Infusionsoft or Salesforce, Dropbox, Google Sheets, Boxbee to share documents. It's one of the things we do with joint venture agreements. We create a Basecamp file folder, drop the collateral file in there. Okay. Never, ever, 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 ever pool investors' money together. Always keep sure. Now, let me give you an example. Let's say you're taking down 12 assets from one seller. Okay. And you don't have one investor fund the whole portfolio. Now that's okay. Let's say say the funding amount's 200 grand. You could take 100 grand from one investor and 100 grand from another investor, and then have them fund that's 6, where their 100 grand is only funding specific assets. You don't want to, oh, hey, you're going to fund the whole thing. Investor A is going to fund 1, 2, 3, 4. Investor B is going to run 4 through 12, whatever that value is. But then it's unique agreements. And I said, yeah, it's one sale agreement from the fund, but that doesn't matter. That all the bank or the fund cares about is who's going to, the wire's going to come in. You could have them set up, okay, can you set up 2 contracts? Or you may need to create 2 separate contracts. Obviously, it would be 2 joint venture agreements, one investor for the 4 assets and the other one for the other 8, whatever, okay? Another thing that's important on that, let's say you've got friends or family members or people that they want to dive in a deal, but maybe they don't have enough to fund the asset. You could have your friends or family members create a separate LLC. Go create a separate LLC, and then they invest in that LLC, and then you borrow from that entity. You're borrowing, so that's a one person to one entity. That's okay. Your 1-to-1 is fine. Not, oh, I'm going to take 5. No, make those 5 people, if they're friends, hey, they go fund. Because you don't want to take 5 grand and 10 grand and 15 grand and another 5 grand. No. You want to take 40 grand from one entity, make them get in a J, and make them deal with that. If they won't deal with it, then you don't want to deal with that drama when stuff splits. Okay. Trust your instincts. If you got a bad feeling from somebody just seems shady, just trust your gut. I've had people we've done deals with, and I was like, do I? And it ended up sucking in the fuse. It sucked later on. So just trust your instincts. I know that in some cases we're like, okay, I'll get a deal done, but then you might have in your paperwork some opt-out clauses, some PETA, pain in the ass clauses. You may want to also have an NDA in there, non-disclosure agreement, those kind of things. Also, what's important too, if a note deal is not going to take 60 days, a note deal is going to take me 12 to 24 months, and it's probably better to set your JV agreements on a note deal at 24 months versus 12 months. Give below 12 months, you're really cramped for time because there's a lot of hurry up and wait in the note business. Okay, 30 days for servicing transfer, 30 days to 60 days for right party contact, and then you're just getting rocking and rolling. Okay, so set your JV agreements. If you're going to do this, your funding agreements for 24 months. It's still a short period of time. Most people think mortgages, they think 30 years, 2 years, much smaller. Okay. I would also, like I said, pain in the ass clauses. If somebody wants their money out before the time frame is up, penalize like an annuity or CD. If somebody has an annuity and they want their money out before 7 years, there's heavy penalties, 25, 50%. Okay, because if somebody wants their money back, okay, fine. You want it done before a year is up, it's 25%, and you're not getting any interest. Okay. That's the thing you want to do. Put those penalties in there and make sure they initial buy them. You may want to have initial all the main clauses. You may also want to do an arbitration clause, where they have to take it to arbitration versus suing you. Okay, so keep that important. Keep those things in mind. A non-disclosure agreement, you could just Google non-disclosure agreement. Non-disclosure agreement isn't that hard to find. You can find them online all the time. Just go non-disclosure agreement. But you want to take some of the language and insert that into your agreement, or make it a separate agreement. Okay. Any other questions about this session? Section or part 7 of session number 2. No other questions, comments, concerns? All right. I'm sure you'll have later on. Very normal. I got questions afterwards, and that's okay. I know we're covering a lot of information. Somebody else said that's why you get the replays and go back tomorrow and sit through the sessions again. You'll absorb more things the second time around. It's part of the reason that we like to let people that are in our WCN membership repeat classes. You can sit through it again. You're going to take it in more the second time. You watch the replays. That's one thing. Okay, great. Live class. Okay, get even more. Watch the replays again to that new class. Often more information. Okay. Mike Peterson, what do you mean? Find sellers of what? Netra Online is to find IRA investors. Yes, but we're talking about finding sellers of what, Mike? If you're talking about sellers of note deals, we covered that already. You need to go back and watch the replays. Go back. That's like the second or third session that we covered first thing this morning. So if you joined us late, you're going to have to go back and watch the replays. Okay. Wesley asked me to do a quick recap on the 5 things that are protecting our investors. Yeah, right back here, guys. And guys, if you haven't downloaded the manual, it's literally in the manual. So download the manual. A lot of the stuff that we're covering, only first liens, buying below 70%, servicing company attorney fees, insurance, checking title and collateral files. Those are the 5 things. And if you're, did I have that up here? If you, so no problem. But if it's on the manual there, guys, you just go back to the manual. Okay, it's there for you. And you got a link. Obviously, you got a link to download this as well for you. Okay. All right. Moving on.